Introducing Apple Vision Pro. Vision Pro is a new kind of computer that augments reality by seamlessly blending the real world with the digital world. It's the first Apple product you look through and not at. Vision Pro feels familiar, yet it's entirely new. You can see, hear, and interact with digital content just like it's in your physical space. And you control Vision Pro using the most natural and intuitive tools, your eyes, hands, and voice. With Vision Pro, you're no longer limited by a display. Your surroundings become an infinite canvas. Use your apps anywhere and make them any size you want. Capture photos and videos and relive your most important memories in an entirely new way. Watch your movies, shows, and sports, and immerse yourself in games on a giant screen surrounded by spatial audio. And connect with people as if you're sharing the same space. These are just some of the ways that Vision Pro blends digital content.
Hi, good evening everyone. This is Hilary here, and thank you for joining us in our another series of a deep dive series for this week. So this week it is me solo because Caden is now away in Taiwan, meeting up with his old friend after more than 3 years since the pandemic lockdown. So for tonight, we will look into Unity. So why Unity is because earlier on when you watch a video which is nicely done by CNBC, that they took the presentation by Apple's CEO Tim Cook, where he explained what the Vision Pro goggles is all about. So from there you can see that how does the Google portray the future trend of this metaverse, where he shows that with the goggles on, you can go online to do all sorts of digital contents online, meeting people, watching videos. It looks attracting, right? So with that, people might be thinking, is there anything that I can invest in instead of buying the goggles? Because when we see the price of the goggles, it's a big jaw drop, to be honest. So here it says that when Tim Cook actually announces this, and the Apple stock actually falls, instead it hits up some excitement. So why is it so? You can see here the share price. And don't be alarmed, it's because it's within that hour. So you can see that the share price has really a sharp plunge within that hour. But not to be afraid, because the sharp plunge is only lasts for like 1 or 2 days, which reached down about $177 in Wednesday, but then it rises back up, which goes back up to 183. But why is such a big reaction that people has on Apple when it launches this new product? Is because they say that one thing is it's very high price at $3,500, and it's really a bit uncool. It looks like a snorkeling goggles where people humorously edited to put in a snorkel. So from the first glance, it looks impressive, but then when people mention about it, it looks more like scuba diving goggles. So because of that, people say that maybe this one is not really what I want. However, even though Apple's share price has plunged, actually another company, Unity stock, jumps 17% because of the partnership of these goggles. So why does the share price actually increase? It's because Apple has actually worked with them to develop some 3D apps for these goggles, and also they are using their gaming software to use in this goggle. So this is the reason why Unity stock actually increased about 17% upon this announcement. So with that, tonight we are actually looking into Unity stock, not Apple stock, unfortunately. But other than Unity stock, we are also looking into another 3D software company, which we put here, deep dive into a 3D technology companies. So it's not one stock, but 2 stocks for tonight. So before we start, I'll put on a disclaimer here. So the purpose of these case studies is to illustrate the application of value investing methodologies and various valuation methods in the context of real-life company. So we are just taking these 2 companies to see whether is this something that we should put our money in to invest. So under no circumstances does any information provided here represent a recommendation to buy, sell, or hold any stocks, because we do not take into the account of individual characteristics, profile, and or risk appetite of a given investor. So in no event shall VIA or any author be liable to any viewers, guests, or third party for any damages arising out of the use of any shared content here. So neither Mind Kinesis Investment Private Limited, Value Investing Academy VIA, nor the authors, which is me for tonight, of the case studies are operated or affiliated with any broker, dealer, or licensed financial advisor. So this is purely to showcase how we can use value investing methodology to decide whether Unity is a good stock to invest in. So with that done, let's jump right into tonight's topic. So first off, let's look at between 3D and AI, because recently now AI is a really hot topic. Anything that has AI related, you can see that the share price has been increasing. So right now, other than AI, what other things that might perk up our interest? Another one could be 3D. So first, let's get some basics done. So 3D is actually a three-dimensional, because if you look at this box, you can see there's a three face of it. So here, the height and the width is actually a two-dimensional. That means when you look at the front, there's a height and the width. Like something that we commonly use is like those cartoons or anime where it's only a 2D. That means you just only see at a flat surface. But if we add in another dimensional, which is the depth, so you can see that it's actually the characters or the things are actually popping out instead of a flat surface. So an example will be like Toy Story. So even though Toy Story is a cartoon, but you can see that when the characters stand, you can see that they have some kind of depth, or you can see their shadows on the ground. So this is what 3D actually is. So now let's look at what are the potential role of 3D in AI field. So the first thing is the computer vision, where they can help to track the objects, which is especially useful in transportation and also navigation. And of course, 3D can be used for simulation and training. Like for example, certain operating tasks that might be dangerous, they can use actually simulation to train up the new trainees to get more familiar with the usage before they are being put on the field to use or to operate on those dangerous tasks. And also, the 3D can be used as a virtual assistants or chatbots in avatars. And of course, currently with the medical line is getting much more advanced, they can actually use 3D to help them to see the actual human body, to see which part of the body that might need help or have some diseases or issues, and predict better diagnosis to help the patients to recover better. And lastly, we of course cannot forget about the latest hit word, which is VR, virtual reality, and also AR, augmented reality. So VR is actually you put on the goggles and then your environment become as if you're online. That means everything is in digital. But AR is slightly different than VR. That means you point your phone to a certain objects and the object will appear on your phone instead of in front of you, in front of like when you're wearing a goggles. So the best example for AR that I can raise up it is actually Pokemon Go. So you can see that in physical world, there's no Pikachu there. But then when you put your phone using your camera to direct to it, you can see there's a very cute Pikachu waiting there to be catched. So this is what AR really is. Okay, so now let's jump into our first company, which is Unity Software. Okay, so as usual, we'll have a quick look at what Unity really is. We only know that it's a 3D development company, but what type of 3D software are they doing or developing, or what are they actually really doing? So Unity is actually a leading platform to create a real-time 3D content. So here, real-time means at the same pace as we are talking right now. Because certain things, there's a bit of lack of time, but real-time, that means it's happening at the moment now. So this platform is actually mainly widely used by the gaming industry, but right now they are slowly expanding to other sectors. Because last time when people heard Unity, they would thought that, oh, it's a game development company. And also they are offering tools and services to all the creators to create 2D or 3D experience and also create VR and AR engine, which is one of the reasons why Apple actually work with them to have a cooperation to help them to create 3D apps for their new vision goggles. Okay, so this company is actually founded in Denmark in 2004 as a game development company in the first place. But when they are in operation for the 1 or 2 years, actually they are not making any money. They are having some losses, but then they change the direction to provide game development tools, which is right now where they offer this software for the game developers to create their own games between 2006 and 2007, which is what Unity is doing right now. And currently, its HQ is relocated in San Francisco, US. And it's been IPO'd since 2020, so it's a fairly new public company because it's just launches its IPO in 2020. And the ticker symbol is actually just the letter U. Okay, so later my colleague will actually show this video to show that what real-time 3D really is and how it's being used in various industries besides in the game development companies. So with that, I'll let my colleague to play the video and enjoy the short session. Hi, welcome back. And I hope you have enjoyed the video. It has actually been done by Unity themselves. So you can see that how actually they are currently promoting how the developers can use their platform to create various real-time 3D interactive creations with their software. So right now, let's have a quick look at what type of products or solutions they are actually offering. So at the start, as I mentioned, their tools are initially used by game development companies. So they are having two main game solutions, which is to help the creators to create a 2D or 3D games on various platforms as being shown here. And other than allowing them to create 2D and 3D games, they actually have a platform for them to build up a backend so that they can develop multiplayer networking. Because if the game is only played by one person, it might be a bit boring. But if you have a game that can play with your friends, with various people, or maybe even someone you don't know over the internet, won't it be much more exciting? Other than gaming, actually, their tools are also used in film and cinematics. And also, they can actually touch up the characters to make it much more in a real-life look. Okay, so here are some of the industries that Unity is also currently slowly involved in. So you can see that they are actually involved in enterprises, manufacturing, education, government and aerospace. So here they actually provide simulations for training and as such. Okay, so now let's look at how do they actually generate their revenue. So here we actually showed their latest quarter, which is Q1. So in Q1, they actually generated a total of 500 million of US dollars for that quarter. Only a quarter, not that year. Okay, so they actually segmented their business operations into two segments. One is the growth solutions and another is the create solutions. So for growth solutions, it actually defined as to create the 2D and 3D contents. But here rises the question is like, if growth solutions is to create, then what is create solutions? So here, create solutions, they define it as the segment where they engage with the users for the creators to engage with the users and also monetize their content, because after they've created their app and also their content, they wanted to sell it off, right? So Unity actually provide this platform for all those creators where they can actually monetize their contents. So this is known as a create solutions. So from here in the first quarter, we can see that create solution actually took up the largest part, which is about 63% for that quarter. And in geographical region, you can see that both For here, EMEA actually is Europe, Middle East, and Africa, actually took up the largest part, which is about 37%, followed by US, and also Asia Pacific region, and also Greater China and other parts of America, such as Southern America. So we can see that EMEA has the biggest part is because Unity was initially being set up in Denmark. So over there, they have a lot more customers in Europe. Okay, so now the thing that we are curious or more interested about is that then what is the future plan or future prospect of this company if I were interested in this company to invest my money? So first off, the first future plan that they have is the partnership with Apple, where they create 3D apps for the Apple Vision Pro goggles. Yeah, so when they announce this partnership, then the share price surge. It's because people think that, oh, working with Apple, then Unity have a much more brighter future. So how bright is the future? Here, usually it's easier to show in terms of videos how this actually works. So another video being done by Unity that actually shows that how the software are able to create an AR or maybe the metaverse goggles is being used in this area. So with that, it's better to show in video, and my colleague will play another video to show how this AR or metaverse goggles is being used. So please enjoy the video. Hi, welcome back. I hope you have enjoyed this very short video where you can see that how actually AR and metaverse goggle work hand in hand. So I believe that when you see that, when you put on the goggles, then you can look through the map in 3D view. It's very exciting, right? Other than using the goggles to do meetings, playing games, and watching videos or shows, you can actually use the goggles to like work on a manufacturing site. Isn't that interesting? Okay, so another thing is that Unity actually acquired this company called Iron Source. Acquire here means that they buy this company to incorporate into their operation. So this acquisition actually was announced in November 2022. So now they are being merged together. So now Iron Source is belong under Unity. So what is actually Iron Source doing? So it's actually a global technology company that specializes mobile app monetization and marketing. Monetization, that means they are earning money from the apps. So these are the various ways that how one can actually monetize their app. Freemium model means that the people can download the app for free, try it out, and if they wanted to have a much more premium features on the app, then they have to pay for the app. And in-app purchases, that means when you play certain games, you think that you need to upgrade, then you can purchase all those goodies inside the app. And one-time paid app, that means when you use the app, then you have to pay for it. And also other things like advertisement as well. However, here released a news that actually Unity lays off 600 employees and plan to close half of its offices worldwide in May 2023, which is just recently. And 600 employees is how much of their total employee? It's about 8% of their total employee. And those that is being retrenched, 200 out of the 600 actually belongs under the AI engineering team, where they are involved in advertising algorithm. So here actually means that they're actually firing off those who are involved in creating those advertisements on their content to monetize it. So here when I was doing my research, I came across this article being done by Motley Fool, where they raises up 5 red flags about Unity software futures. Because the first thing they say that this layoff indicated that the ads, that means this advertising algorithm is actually still in trouble. That means they are still not able to fully monetize their product. And when they decided to merge with IronSource, it actually says that they are actually replacing these 200 employees with IronSource. It's because maybe IronSource has a very established platform to how they monetize all those mobile apps. And also, when they acquire this IronSource, they're actually taking on more debt. So is this something that we should take note of or be concerned about? So this brings us to their financial statements. So first off, we will look into their revenue. So here revenue is actually how much sales that the company can generate. So here we can see that it's in a positive and increasing trend, which is something that we like to see because that means the company is able to make sales. However, for their EPS, which is earnings per share, so earnings per share means that for every one share that an investor purchased, how much earnings or net income that the company can make. So here actually is the zero line. So if you see properly, actually the trend is actually in a downtrend. So this means that the company is actually losing money, even though their revenue is increasing. It's because one of the reasons is because they are having very high expenses. So if the expenses is much more than their revenue, then of course the company will experience certain loss. So here is like the first red flag for me. And then operating cash flow means that how much of the cash is the company able to bring into the company from their business operations. And we see that here is the zero line, and anything below zero is actually negative, above is positive. So negative means that the company is actually bleeding money. So here we can see that other than 2020, most of the years since they launched their IPO, we see that actually the company is bleeding money to keep the business running. So another red flag. And also earlier on we saw that when Unity acquired IronSource, they actually take on debt. So we can see that here this line is 0.5. So why do I draw this line? It's because based on value investing methodology, we wanted to see this debt to equity ratio less than 0.5. So in simple terms, it means that for every $100 of the equity that the company has, they cannot borrow more than $50 of the debt. So anything above this line means that the company is actually borrowing a bit heavy to run their operations. So we can see that for the past 2 years, the company actually has quite a high debt compared to the 0.5 line. So with that, this is something that investors should really take note of, even though they might be interested in the future prospect of Unity. So whether will they able to turn the ship around, we will only know after a few years later. So when we saw the news that Apple is working with Unity, we were excited. But then when we look at the financial results based on the value investing methodology, we kind of like, if we only show this, I don't think people are much interested. So with that, we decided to add in another company that is 3D software related. And this brings us to this company, Autodesk. So I believe that for students who are doing designing or maybe in the media, they frequently use this software because my colleague Irfan actually told me about this company. So with that, let's look into this company. So what is Autodesk? Because this is the first time when I heard this company, it's like, what is Autodesk? I don't know what they are doing. So now let's have a quick look on their background. Okay, so this one is actually a software design company where they specialize in 3D design, engineering, and also entertainment software. And they actually offer a very broad range of software tools, which is computer-aided design, computer-aided manufacturing software, and also 3D modeling applications. So if you go onto their website, their home website, you will realize that they actually offer a very, very wide range of software that is design, 3D modeling related. So which is really interesting in my opinion. And actually their products are being used in various industries, especially in the architecture and construction and engineering. Later we'll find out why. And the company is actually quite established much longer compared to Unity. It was being founded in 1982 and they are currently based in San Francisco. So when they launched their IPO, they actually launched in 1985 with the ticker symbol ADSK. Okay, so now let's look at how life is before CAD, which is the computer-assisted design software. Are you curious? I am. So before CAD, actually, in order to design certain things, they need to have a lot of designers, architects, engineers to draw out all those designs, make a lot of calculations. So you can see that the whole room, all of them, they are using a big piece of paper just to draw, just to measure and design all those things. And what are they actually drawing? So you can see here on this piece of paper, they actually use a special ruler, and also you can see there's calculator, and also this thing which I only remember using it during my maths session. So they have to actually hand-drawn all of these designs, and then maybe they will pass on to their next colleague who is much more specialized in certain aspect of this design to further do the job. So you can see that just one design of a product involves a lot of people. But with the arrival of the software, we can see that by using the software, one can just easily use a PC to design certain things and then use the PC to calculate based on the measurements. So it actually simplifies the simulation and also optimize the design on the software before they put it out to make it into the real thing. And then CAM is actually a computer-aided manufacturing because this helps the manufacturing side to streamline their processes. And all of this, they are actually able to save time, make sure the quality is much better, and also deliver a much more sustainable outcome, because instead of doing the thing and then encounter issue and have to rewind back to redo it, which takes up a lot of time and also use up a lot of resources, they can easily do it on the software or on the computer to see that whether does it works or not. And also the last key point is that it is the collaboration, which we will see later how this software actually is the collaboration between the team members. Okay, so for Autodesk, their products and services are mainly used in 3 areas. So the first area is in architecture, engineering, and construction. So actually they offer tools to design early stage of the infrastructure and also on the on-site construction to make sure that the construction is being done seamlessly. And they are also used in product design and manufacturing to design various types of product by using 2D drafting. So that means on the software, they can actually draft out in a 2D manner before they decided to move on to model in a 3D manner, in a real-life manner. And of course, since they are doing 3D modeling, they might as well involve in media and also entertainment, where the creators can actually build a 3D animations from their tools as well. So we can see that Autodesk has certain parts of their software are actually overlapping with Unity, but their main usage for their products are actually in architecture and engineering and construction. Why do I say so? Because as usual, we will look into the latest quarter revenue generation. So for the first quarter of 2024, they actually generated about 1.27 billion of USD dollar. So we can see that compared to Unity, actually, Autodesk generated a much more revenue for that quarter itself. So here, actually, they segregate into product offerings, and we can see that architecture, engineering, and construction actually took up the lion's share, which is about 46%. Then AutoCAD software itself, LT means a much more cheaper version of it. It's taking up the second part of the pie chart, followed by manufacturing and also entertainment. So we can see that the most largest part is actually in the construction and also architecture industry. And in terms of geographical region, both EMEA and also United States are equally shared for this region, then followed by Asia Pacific region and also other parts of America. Okay, so now as usual, we are also curious that since Autodesk has a very good products offering and they are being used in wide range of industries, especially in the architecture construction area. So how are they going to further improve their products, or where they are moving forward? Okay, so the thing that they mentioned in one of their presentation slides is that they wanted to have a sustainable double-digit growth. And here they actually listed out to have a revenue growth of 10 to 15%. So how are they going to do that? So they list out 3 things that they are planning to grow their revenue. So let's look at how they are going to do that. So first thing is that they wanted to renew and expand their core design business. So here they actually separate into volume. That means how they indeed how they wanted to increase the number of customers that they are going to serve, and also the pricing, how are they going to price their products. So based on here that is being listed out for volume drivers and also price drivers, this is the revenue growth that they predict they will be able to increase. Then they also mentioned that they plan to expand their product offerings to other platforms such as water and also other product manufacturing sites. And for this part, they actually predicted they will have a revenue growth of 1 to 4%. And finally, they have a slight change in their business model. So this one, we will look into the next slide on how they plan to change their business model. So here, they have a 1 to 2% of the revenue growth. So when you add up all of the revenue growth, it makes up the number of 10 to 15%. So we can see that actually they systematically list out on how they plan to grow their revenue. Instead of just simply throw a number says that, oh, we plan to grow the revenue for the next maybe 1 or 2 years about 10 to 15%. But actually, they actually listed out on what they plan to do and how they are going to achieve it, which I find it is very detailed. Okay, so here they actually also explains how they plan to change or evolve their business model because they wanted to have more customers to use their software. When there's more customers use their software, that means there will be more paying customers and their revenue will definitely grow. Okay, so last time, whenever people want to use Autodesk, they have to pay upfront a huge amount of money to use the software. So this actually creates a barrier for certain people who says that I only want to use it for one time off, or I don't really need to use for long term. So this actually turns off certain group of people. But with that, they actually changed this business model to say that instead of paying upfront to use the software, there's a subscription base where you can match based on your needs, such as maybe I just want to use a monthly basis or maybe an annual basis. And also there's a tiered plans. That means they will say that I only need certain features of the software, or I don't need a lot of support based on the personal needs of the customers. And finally, some customers just say that I just want to use a software for this project, then that's it. Like final year project students, they just say that I just want to do this for my final year project, then that's the end of my using of the Autodesk software. So here they also have a pay-per-use model for this consumption. So with that, with these various type of different pricing plans, they actually allows more customers to use their software instead of paying it upfront with a huge amount of money. Okay, so other than have a double-digit growth, they are actually focusing on building an enduring customer relationship where they wanted to deliver a world-class customer experience and also change their digital transformation by offering a leading platform for design and make. So what does this tool actually means? Which brings us nicely to the third part where they invest in their organic growth. So here they actually list out this tool type. And actually this design and make means that the customer can actually design their creations and also make their creations on cloud-based. And then from the cloud-based, they can actually use it. So now let's look at how they actually plan to do that. So here they actually list out 3 types, which is Autodesk Fusion, Forma, and Flow, to help them to bring this design and make onto the cloud platform. So let's look further deep into how these 3 works. Okay, so you can see here Fusion, they list out what Fusion is going to do, what Forma is going to do, and also what Flow is going to do, so that this actually helps to provide insights and intelligence to the customers when they are designing their products or designing the operation flow, workflow. So with that, with this platform that's available, they actually can put all those data onto the cloud where various team members, because within the corporation, there are certain team members to do certain things. Like for example, in a construction company, there are certain groups of people who are being hired to do the design of the interior buildings or the infrastructure of the buildings. And also there's a certain group of engineers that are designing how the water pipes is going to work, or where is the lighting going to be put, how is the electrical system going to run throughout the company. So with that, there's a lot of collaborations being worked around. So imagine without the software or all these cloud-based things, one department has to run off to another department to work together before they can bring this into reality. But with the cloud-based approach, they can easily get all this data from the cloud base, and then they can work concurrently with the team members. So this is how it is the collaboration between the team members. So they actually connect everything on a cloud-based platform. Okay, so now let's look at the financial statements for Autodesk. So as usual, let's look at their revenue. So for the past 10 years, we can see that there's a slight stagnant and so a slight drop for Autodesk. But then since 2018, the revenue has actually increasing year on year on a positive uptrend. And for their EPS, we can see that in the early years, they actually experienced certain losses before they have profit since 2020. So we can see that it's slightly increasing right now. So whether will this trend continue, we will have to monitor further. And also for their operating cash flow, we can see that the trend is similar to the revenue. Since 2018, the operating cash flow has also been increasing year on year, even though they experienced certain downtrend in the early days. However, for their debt to equity ratio, it's much higher compared to Unity. So is this something to be alarmed with, because Unity was about 0.77, but Autodesk is 2.25, which is much, much higher compared to Unity. But even though the debt is very high, most likely it's because the management, they wanted to grow the company, so they need to have money to grow the company. So one way they can grow the company is to acquire, to have some capital from investors, or they can actually borrow money to grow the company. So here, most likely, the company management actually borrowed money to further grow the company. But as long as the management is able to pay their debt and the debt to equity ratio is going downwards, which is something we wanted to see, then we will think that the company is actually making money and they are able to pay back their debt. Okay, so while I was doing research on Autodesk, these interesting metrics actually came up, rule of 40, because usually when we are evaluating the company, we will use something like price to book ratio, which they will measure that whether the company has a lot of inventories or some tangible assets. But for technology companies or the software companies, they don't have inventories like tables, chairs, or machineries to run the business or to produce the products. Most of them, they are mainly data or software. So these are actually intangible. That means something that you cannot see, like the intellectual property, the trademarks, the patents. These are something that we cannot see. So with that, how are we going to actually evaluate companies like this? So by doing this, when I was doing this research, these financial metrics actually came out, called rule of 40. So this one is actually a financial metrics used to determine the financial health of a software company. So in short, they are determining whether is the company focusing on growing or focusing on earning profitability. So here, this is actually the formula for this rule of 40. So that means you add up the revenue growth rate with the profitability margin. And the profitability margin that they use here is actually EBITDA margin. So here in this chart, it's easier to explain. So rule of 40 means that when you add up the revenue growth and also the EBITDA margin to 40%, that means that this software company is somewhat considered financially healthy. So how does it actually play out? It could be 20% revenue growth or 20% of EBITDA margin, or they can even take 40% EBITDA margin. That means the company is profitable. Or the company can just say that, oh, we are growing year on year 40%. But when they mention that they're growing year on year, which is in the increasing trend like Unity, do take note if they are actually making earnings or not, like the EPS, earnings per share. Okay, so here, when I was looking at this, I was like, maybe this is something we can look into. But Caden actually mentioned in one of the few videos back that he mentioned that EBITDA is something that someone should take concern of, because EBITDA is actually a short form for earnings before interest, tax, depreciation, and amortization. That means these are all earnings before they minus off the interest, the tax, and also some other non-operating expenses. So here, this EBITDA actually provides insights on how the company is operating, whether their operations are able to generate profits or not. and also for cash flow to determine if the company is generating cash flow. However, they do not reflect all of the costs, which is the one that I mentioned above, the interest, the taxes, and other non-operating costs. So we cannot really determine whether is the company really profitable or not. So with that, I have a special guest for tonight, which is ChatGPT. So I just have for fun to say that, hey, ChatGPT, is there any financial metrics that we can evaluate a tech or an intangible asset company? And they say that, yes, there are several financial metrics which I go through, and actually one that caught my eye is this one, free cash flow. Yes, so from our 4 days value investing program, VIP, Caden actually taught one of the financial metrics, which is free cash flow. So for tonight, we will also be using free cash flow. So what is really a free cash flow? Free cash flow actually means that the cash that the company has after they deducted the capex. So this is actually the formula of free cash flow. So capex is actually means the expenses that the company use to purchase the assets that will last more than 12 months. So when the company wanted to grow, wanted to further expand the businesses, they will definitely buy certain equipments, certain tools to further grow the company, right? And those tools and equipment will usually last more than 12 months. So all these expenses is known as capital expenditure. So operating cash flow, as mentioned earlier, which is the cash that the company can bring in from their operation. If it's a positive, that means the company is able to bring in cash from their business operation. But if it's negative, that means the company is actually bleeding cash to keep the company running. So with the operating cash flow minus off all those expenses, the free cash flow is the cash that is the company available to use. So why is cash important? Because it's only cash the company has that can help them to pay for their day-to-day operations. And if there's some excess of free cash flow, the company can actually choose to reinvest this money into the business to further grow the company, or the more good news for investors is that it can be distributed as dividends to all shareholders. So this is what free cash flow is. And also here they actually mentioned that the positive and increasing free cash flow is actually shows whether the company able to generate cash internally. Okay, so now let's look at these two companies. So for Autodesk, the early days, the company might not be able to generate cash, but then since 2018 onwards, it has been on a positive and increasing uptrend. However, for Unity, here is the 0 mark, and we can see that it's still under the water for now. So whether will Unity become positive, that is for the next few years for one to take note of, especially with right now, Unity is working together with Apple to develop the 3D apps. Maybe their fate will be similar to Autodesk, who knows? Okay, so to conclude all for tonight's session, both Unity and Autodesk actually they operate in the field of 3D technologies. However, they have different focuses and also target industries and also product offerings. So now let's compare between these two companies. So for Unity, they mainly focus on creating 2D and 3D interactive contents. And their target industry, the main target industry is within the gaming, the filming. And right now, even though they're starting to branching off to other sectors, but it's still on an early stage. And their main product offerings is real-time 3D development tools to create all these interactive contents. And do take note that currently the FCF, the free cash flow for Unity is negative. Whereas for Autodesk, their focuses is on 3D modeling and also simulations. And the target industry is mainly within the architecture, engineering, and construction sites. And their product offerings are mainly for CAD and CAM software. And we can see that since 2018, their free cash flow has been on a positive and increasing uptrend. So with that, this is the conclusion for the whole for this session. But there's something that we have to ponder is that how do I know whether this company that I know of is good to invest in? Or should I just listen to the stock tips on news channels like, oh, Unity share price increased 17% because they are working together with Apple, so I should jump in and buy? Or should I listen to anyone else on social media to say that, is this a good stock to buy? Or another good thing is that, should I do my own diligence based on the knowledge that I have? So here, Caden always says that there are two key things that you need to prepare before to invest. The first thing is the knowledge. Knowledge what to do, and also knowledge what not to do. And also definitely you need to have cash to start investing. So here there's another video that is being done in-house to showcase that some of our graduates, after they have attended the value investing program, how they managed to benefit from this program and where, how well are they doing, or how they managed to benefit from all this. So with that, I'll have my colleague to play this video and do enjoy their sharings.
The number one obstacle that will prevent me from investing is my bad past experience. I was scammed before, so I really am traumatized about it.
I'm more concerned about the losses that I may incur without proper knowledge.
So some of my friends and family has actually lost a lot of money in investments, and that was probably like the biggest obstacle that I have to overcome in order to make my first move into putting real money into an investment.
To be honest, I made some errors in the past in stock investment as well. I just put in money without knowing. After attending the VIA course, that was the most important turning point for stocks. Yeah, after that, the portfolio just went up and up.
I decided to source for a reliable training, and I found VIA. I took up the course and I learned that, okay, there is another side of investing, that we can do this very rationally.
I remember I did not fully comprehend the concept then. In the end, I attended VIA because Caden's life experiences and achievements were convincing.
Wow, investing has improved my life, especially the unusual strategy, the cash flow option strategy that Caden taught us. And plus, we know how to scan and screen for good and cheap companies. So I've been earning premium since last year, so it's been 1.5 years. So I have very regular passive income, and it really improved my life because I have a hope of an early retirement and giving more to my family.
So investing has definitely changed and improved my life by giving me back my time freedom. So a lot of people think that investment is about money, making money, but no, it's actually not. It's about what money can do for you, and the number one thing that it has helped me is that it has brought me back my time freedom. So right now I'm semi-retired. I get to spend a lot of time with my family, kids, and friends as well, and of course I can go travel anytime I like because I don't have to worry about my finances.
By investing in right companies or stocks or whatever, I give a better chance to myself, my family, my children, a better starting line. You know, in the future, they have more resources, they can do whatever they want to do.
I think what really put me to VIA was Caden.
Caden,
I attended his masterclass, I heard him speak, and I've heard other speakers speak for their own masterclasses. And Caden's humility and honesty was obvious, that this guy is not out there to get you to sign up. He's just there to show what he knows and let you learn about investing his way. So I found his honesty really, really enticing.
well, I've heard other value investing presentations so far, and I found that Caden to be very sincere, knowledgeable, and I believe that he is teaching in a way where it is through his honest opinion and experience. So I think that is very useful coming from somebody who's you are trying to learn from. That's why I decided to go with Caden and VIA.
If you want to be financially free, learn from people who have the means. If you want to be rich, learn from the rich. Only those people can teach you these things. So I came to VIA searching for a mentor, and I think Caden is actually quite a perfect one because he gave us a mindset, and that was the most precious thing, a habit that he gave us for investing.
So in terms of investment results, in terms of ROI, is about 10 to 15% per annum.
1.5 years, I doubled my savings.
I have been investing for 3 years now, and proud to say that one of the stocks that I own is now a two-bagger. And a two-bagger means it has gained 200%, so I'm quite proud of that.
Since I started in October, November period, and by now it's about almost a year already, and I got about 29% of ROI, and I think that's fantastic considering the fixed deposit interest in Singapore. Thank you.
Welcome back. I hope you have enjoyed the video that is being done nicely by our in-house production team, Susie and Irfan. And you have seen some of the testimonials by our graduates on how they have actually done after they have attended the value investing program. But if you don't know actually what this program really is about, fret not. Let's come and join into our complimentary value investing masterclass, where you can learn 3 sources of passive income even though you don't know how to invest in the first place. And you can actually start to invest with minimal capital. So how much you can start off, Hayden will share more about this. And also you also can able to learn how to create a cash dispensing machine to replace your existing salary. This sounds attractive, right? So if you're interested to learn more about all these 3 things, we actually have 2 upcoming sessions on 28th June on a Wednesday, and also on 6th July on a Thursday. Both sessions start at 7 to 10:30 p.m. So what will you get? Because there will be some freebies, which is the first one is the book, Value Investing Simplified. If you buy it on a bookstore, it's worth about $33. And also, you also get the $10 of a Starbucks card. Inside, there's a credit of $10. So that means when you're reading this book, you can go to Starbucks, drink a cup of coffee to enjoy. And if you are to bring 1 or 2 friends, you'll be able to receive $20 worth of NTUC vouchers and also a $20 of a movie ticket. But do take note that even though you bring 2 friends or 3 friends, you only get 1 set of this. That means only $20 of NTUC voucher and also $20 of movie tickets. So all in all of this, other than that, your friend will still receive this book and also this gift card. So only you will receive this. So actually all of this add up together is actually worth about $43 and also a priceless training where you'll be able to learn all these 3 things, which is you'll be able to learn how to generate cash, how to create a cash dispensing machine, and also how to generate 3 sources of passive cash flow, and also how you can start to invest with minimal capital. So if you are interested on how to evaluate a company to decide whether is this a good company to invest your money to grow for the long term, do come and join us in the masterclass, where our colleague will send a link on the comments and click on the link, and then you'll be able to join us in our upcoming masterclass. And we look forward to see you. And with that, that's the end for tonight's session, and I hope that you have find this session informative and also you enjoy the learning. Do give us a like or subscribe to get to know more about any other of the latest contents that will be shared by our team. So with that, at Value Investing Academy, we care to make you a better investor. And thank you everyone, and have a pleasant evening.